taxes. My disclaimer, this video is for informational purposes only. I am not an accountant, I am not a tax advisor, and I am not an attorney. It is suggested that you consult with your accountant, your tax advisor, and your attorney. You may also share this video with them, and maybe some of the links that I'll share below will actually assist them, or they may already know all the information. So what is homestead exemption, or homestead tax exemption, or Florida homestead exemption? We're going to get right into that in this video. Now that we've covered that disclaimer, I am Tamela Staubs, and I am located on the Treasure Coast of Florida. As you can tell why we call it the Treasure Coast. Actually, that's for another video. I'll explain why we call it the Treasure Coast in another video. So one of the things that I love to do is help people, just like you, buy a home and or sell a home. We're going to cover something later in the video about portability. So maybe you are buying a home and selling a home. Would you like to know how that impacts your taxes? We'll get into portability later in the video. If you watch the video until the end, I have a gift for you. I'm going to make this information that I'm sharing with you so much easier for you to find so that you don't have to write notes while you're going through the video. So hang in there with me until the very end of this video. So let's get right into this. What is homestead exemption, or homestead tax exemption, or Florida homestead exemption? Well, I printed out some information to share with you so that I can make it a little bit simpler. Typically, the number that you're going to hear for the Florida homestead exemption is $50,000. You may or may not know that there are additional exemptions, and I'm going to share where you can find that information. Or you can share that with your accountant, your tax advisor, or your attorney, any of the above. Maybe even helpful with your mortgage broker, mortgage banker, or mortgage lender. So here's how Florida homestead, the explanation for the Florida homestead exemption. The Florida homestead exemption is an exemption that can reduce the value, the taxable value, not the actual value, but the taxable value of your home by as much as $50,000. It's offered based on your home's assessed value and offers exemptions with certain value limitations. Some of those specifications: for the first $50,000 in assessed value of your home, up to $25,000 in value is exempted. This exemption applies to all property taxes, including those related to your school district. You pay full taxes on any value between $25,000 and $50,000. So let's take a $90,000 home, and not that we're really going to find that, but let's just use that number for simple purposes so that we can use the equation, and then I will get into where you can find that, and we actually have a calculator as well. For this home, $90,000, the first $25,000 would be fully exempt from taxes. The next $25,000 would be fully taxed. The following $25,000 would be exempt from all but school district taxes, and the final $15,000 would be fully taxed. Well, if you're not confused at this moment, I am. And I'm the one sharing it on video. That's why a little bit later in this video, I'm going to share with you a homestead tax calculator, homestead tax exemption calculator. So let's move on for just a moment. Now that we got the basics of what the homestead exemption are, we've put those to the side. How do you apply for your homestead exemption? Well, you can do an e-file right online. which I will share some of those links with you, it is important to know that each county is a little bit different, and I'm going to explain that in a few more moments. Are there Florida tax exemptions for seniors? Let's step into that for a moment. The answer is yes, possibly. The reason I say possibly is there are some criteria. So a Board of County Commissioners or the governing authority of any municipality may adopt an ordinance to allow an additional homestead exemption of up to $50,000. A person may be eligible for this exemption if he or she meets the following requirements: owns real estate and makes it his or her permanent residence, is age 65 or older, household income does not exceed the income limitation. And there is, which I can share with you, a form like this or similar to this, I'll share with you so that you can go on there and read for yourself if you would like some more details. Basically, a person may be eligible for this exemption if he or she owns real estate with a just value less than $250,000, has made it his or her permanent residence for at least 25 years, is age 65 or older, does not have a household income, as we talked before, that doesn't exceed that specific limitation. How do you apply? You should complete and file all required forms and applications for these exemptions with your county property appraiser. And you always should check with your county property appraiser to share that information with you so that that makes it a little bit easier. You can actually go on to St. Lucie County Property Appraiser, Palm Beach County Property Appraiser, or Martin County Property Appraiser. Each of these websites have information that will help you through this process. And it is also where you can apply for your Florida homestead tax exemption. As an example, Martin County offers their Florida Homestead Exemption Calculator, which I will share that with you at the end of the video. And I'll also link it down below so that you have the information available. That is only one of the counties. The other counties do the calculator as well. And how does the calculator work? Well, if you plug in a number of what you're purchasing the property for, let's say you're buying a $500,000 home here in Florida. You put in that number into the calculator and it automatically does that calculation we were talking about before. It does that for you to give you an estimated amount of taxes. An estimated amount of taxes is helpful because you might be looking at a property that presently is $500,000. And the taxes might show $1,500. Well, when you receive your mortgage payment, your mortgage bill the following year, after it's cycled through, your payment may be much higher. This is also something that you can discuss or share this video with your mortgage banker, your mortgage lender, your local bank, whomever it might be that you are doing your mortgage with. So let's go back to that for a moment. Let's say that the taxes show $1,500 on a $500,000 home. It is a surprise for many people when their taxes go from $1,500 to a much larger and higher amount. As an example, let's say that your payment on your property, and I'm just going to throw a payment out there just so that we can explain it for this video. Let's say your payment on your property is $2,000 per month. That's your mortgage payment. The second year, after that cycle has gone through with your taxes, your payment could potentially raise to $2,500 a month. It would be important to know this before you commit to a 30-year mortgage. That is why your Florida homestead tax exemption information is extremely important. And that's why I wanted to share it with you, especially if you happen to be a first-time home buyer. Now, how does this impact you if you're buying a home in Florida and you're moving to another home in Florida? So let's talk briefly about portability. Portability. If you sell your home and you buy a new one, would you lose all of the tax savings that you've accumulated over the years? No. SOH is short for Florida's Save Our Homes. It's a provision that allows you to transfer all or a significant portion of your tax benefit up to $500,000 from a Florida home with a homestead exemption to a new home within the state of Florida that qualifies for homestead exemption. It's referred to as portability. Again, I'm not going to be able to give you all the information. I can direct you to where you can find some more information about your portability tax. You can e-file for your portability when you're e-filing for your homestead exemption. And I can link that below, or if you watch until the very end of the video, I have some of this that I'm going to share right with you. How does portability work? Well, if your new residence has a higher value than your former residence, let's say you buy a home for $300,000 and your previous home was $250,000. The portability amount is determined by subtracting the assessed value of the former home from its market value. For example, don't we love examples? If the market value of your previous home is $250,000, but the assessed value is $150,000 because of the SOH benefit, the assessed value of your new home would be reduced by $100,000. And the 3% SOH cap will continue on that portion of your new home's assessed value. If the new residence has a lower market value, you can transfer a percentage of the difference from your previous property to your new home. So if you're moving within the state, portability can come into play for you. And it's important to know. To qualify for portability, you must establish your new residence on or before January 1 of the second year after leaving or selling your prior residence. As I said, this video is for informational purposes, and at the time that this video was filmed, this was accurate information that I'm happy to share with you at the end of this video. Does that sound complicated? Don't worry. They handle the math, thank goodness, for the portability. And they'll send you a portability transfer form when your new homestead exemption is approved. So let's talk about deadlines. The Homestead Exemption Florida deadline, March 1 or possibly March 2. Now there are some gray areas to that. If you happen to miss the March 1 or March 2, you can read further for some information on how you might be able to file for your homestead exemption. It might also be helpful to go ahead right now while you're watching this video and put into your calendar a reminder for that March 1 date so that you've taken care of your homestead exemption for Florida. To sum all of this up, as I promised, an easy way to find all of this information, I'm going to share with you each one of the things that we've discussed today so that you can research further, share it with your accountant, share it with your tax advisor, your attorney, your mortgage broker, your mortgage lender, yourself, your family, your friends, whoever you'd like to share this video with. And the information I'm going to share with you is free. No, it's not a sales technique. I am not signing you up for something additional. I want to share with you this information so that it helps. It is one of the #1 questions that I do receive when I am selling a home, helping someone buy a home, and especially for first-time home buyers. That portability comes into play as well when you're transferring, maybe you're downsizing or you're upsizing in Florida. Please keep in mind, that as you go on to the St. Lucie County Property Appraiser, the Palm Beach County Property Appraiser, or the Martin County Property Appraiser websites, that they do have those calculators available for you that make it much easier for this information and to find out what that tax amount might be, especially when you're buying a home. Because I'm not sure about you, but I don't like to have my clients surprised with a payment that goes up by $300 or $500 or more. It is something important to know. This, if you are an investor, will not apply. And I shouldn't say that. Again, consult with your attorney. But this is for a primary residence, as each one of the counties dictate in their information that they share. So if you'd like to, you can click on the link below. There are a couple of them in this body to get some more information that I've covered in this video. And that is as much information as I can share with you today about homestead exemption, homestead tax exemption, or Florida homestead exemption.